We got to get back to earnings here. Back to the bread and butter. Snap and Twitter both out with numbers that beat estimates, as we talked about earlier. Snap shares trading at a record following robust numbers as well this morning. Both of those companies seeing subscriber growth, but Snap in particular also seeing better monetization of that subscriber growth, and both companies seeing fairly robust ad sales as well. Jason Helfstein is with us now. He's Oppenheimer Managing Director and Senior Analyst. Jason, it's good to see you. Let's start with Snap here and the growth that the company is seeing. And how are you thinking about them, sort of the transition to reopening? I see Snap as a company that people still use kind of when they walk around just to text, even if they aren't posting the same kinds of things on Snap that they were doing before.
Yeah, I mean, look, just numbers real quick. They added 12 million users in the quarter. That was less than first quarter 16. So you could argue maybe the reopening kind of had them adding less users, but it was 3 million above where they guided. They did make a point of talking about they think with the reopening, you potentially get less kind of user-generated content created. And so as opposed to Spotlight, which is kind of more of the, the kind of semi-professional, right, of kind of influencer content. So look, definitely in the narrative, but I think the more important thing here is that they really are dialed into what the advertisers are looking for. And as, again, brands feel comfortable about the economy, are launching new products, they are looking at Snapchat as a key platform for them, and especially going to the kind of all-important, back to school holiday season. It looks like Snap is incredibly well positioned and kind of leading with these augmented reality and kind of next generation advertising.
And Jason, thinking about Snap's place within the online ad ecosystem, is this a story of Snap gaining share within that, or is it just that Snap continues to offer such a compelling platform on its own that it's bringing in spend, even if its share relative to a Facebook or a Google isn't climbing at a rapid rate?
Yeah, no, they're definitely gaining share. I mean, they were up, their revenue was up 116%. I don't think any other company in digital media will see that much revenue growth in the quarter. I mean, Twitter was up, which we'll talk about in a minute, was up 74. I think people expect, again, kind of Facebook and Alphabet to be strong, but not nearly those levels. So no, they are, on paper, they are gaining share. And then kind of you talk to advertisers, they are gaining share of mind with the products that they're talking about. And again, a lot of what they're talking to advertisers about, no one's really spending money on yet, like, virtual try-on ads and, but people see where this could potentially go. And so, right now they've kind of having the best of both worlds, which is that on paper they're gaining share, and the enthusiasm around what they're doing. And then look, I mean, we all sit around thinking about, well, we don't sit around, but when we think about these companies, we're always thinking about like, what is like the next leg of growth? Like, is there another business, another vertical that has not been factored into the model that you'd say if they did X, it would be worth Y, and the stock is not as expensive as it appears on paper? And so now there's a whole discussion of like the metaverse, right? And you report on kind of what's going on in the gaming space and Roblox and all that, and Mark Zuckerberg has talked about it in this idea of like, could Snapchat be a player in the metaverse? Well, what they're doing with augmented reality, they have the audience, maybe, right? And so those things just get Wall Street really excited.
Jason, what's this better stock to own, Twitter or Snap?
I mean, from here, it's easier to say you'll make more money in Twitter. Snap, expectations are sky high. I honestly think people are surprised that the stock is up this much. I mean, if you talk to, institutional investors, they expected a very big quarter and very big guidance. And honestly, while the guidance is great for the third quarter, guiding to kind of 59% revenue growth at the midpoint, call it 60. Most of the institutional investors were expecting that. So I actually think you could see much more positive surprise in Twitter over the next 12 to 18 months than Snapchat from a kind of financial standpoint.
And so maybe moving, staying on Twitter, but moving away from the financials specifically and thinking about the product pipeline that we've seen from Twitter over the last, quarter. They called out in the letter. They've got ticketed spaces. They've got super follows now. As an analyst covering the company, how does that product cadence animate anything for you? Does it make you think differently maybe about how management's running that business?
I mean, a few things, right? So the whole issue that Twitter had historically was it was too hard to use. So people went to Twitter and then they didn't go back because they didn't know what to follow. It's too confusing. And so I think topics is huge. It makes it much easier for new users. They talked about adding 2,500 new topics. They're now at 9,500 topics across 9 languages. They're doing, they had 175,000 new city locations. So they're now, and kind of cited the benefits of that. And so I think you're just seeing kind of better kind of engagement with, the new incremental users. And then the idea around the Olympics, there will be a lot of people who come to Twitter who probably have not been on Twitter in 2 years, right? Since the last Olympics or maybe some sporting event, some championship sporting event or something. And to the extent that Twitter is a better experience now than perhaps the last time they were there for a major event, that increases the likelihood of repeat activity. And so I think that's really where it all comes together. I mean, yes, it'd be terrific if they can get the subscription product out. And to your point, tip jar, ticketed spaces, super followers, all that. But, at the end of the day, Wall Street is very focused on, DAU growth and revenue per DAU. And so, that's the output, right? So it looks like, for the first time in a while, Twitter is really doing the right things. And, look, we are in a very momentum-oriented stock market. So you could understand why Snapchat is seeing the kind of activity it's seeing today in the stock. But I think kind of as the dust settles out, I think you'll get investors kind of looking at Twitter, and some people may have not invested in Twitter in a while coming back and saying, okay, this is becoming much more investable.
Hey, Jason, just one last quick one on Bitcoin, which is something that Dorsey was asked about on the call. And obviously, he's really leaned into Bitcoin and his other business, Square. It's a more natural fit. And he sort of talked about Bitcoin for Twitter, but it's unclear to me what exactly it brings to the table. Do you think there is an opportunity here for him to sort of integrate it more into the Twitter business also in some way?
I mean, look, I think he's trying to be, supportive of Bitcoin to the extent that he's trying to figure out real business applications for it. I mean, to the extent that, payments or virtual gifting becomes more prevalent in Twitter, technically you could accept Bitcoin, but I kind of don't see Twitter becoming a Bitcoin play anytime soon.
Gotcha. One of the few things, I guess, that he's touched that it maybe isn't as much. Jason Helfstein, thank you. Oppenheimer Managing Director and Senior Analyst joining us there to chat what's going on with Bitcoin.